Welcome to this video where we are going to take a look at grant accounting. This is the first in a series of videos. In this first video, we'll look at some of the differences in grant accounting so we know what the issues are and what categories grants can fall into. And in upcoming videos, we'll look at the actual accounting entries. When we look at accounting for grants, one of the most important things is looking at the drivers, whether it's conditional or unconditional. And then in terms of accounting, it's also important to know whether it's restricted or unrestricted. In general practice, people use the terms unconditional, conditional, restricted, unrestricted, somewhat interchangeably depending on the circumstance. But from an accounting perspective, there are clear differences on what is unconditional and what is conditional, and what the differences are between conditional and restrictions. And so let's look at what these terms mean. When we look at this chart here, we see that we've got a flow. On the extreme left, you see the grant. When you get the grant, you've got to make a decision. Is it conditional or unconditional? And we'll cover that in some detail. And then from then, whether it's unconditional or conditional, we need to decide, is it restricted or not restricted? That results in all grants falling into one of the four buckets on the right: unconditional restricted, unconditional unrestricted, or conditional restricted, and conditional unrestricted. So let's take a look at what the guidance is. The basic guidance is that if a grant is determined to be conditional, you only recognize the revenue when the conditions are met. To reiterate that, conditional grant revenue, whether you receive the money or not, is only recognized as revenue when the conditions are met. In contrast, if a grant is unconditional, all of the revenue is recognized immediately. Now, the US guidance related to this is here on the bottom right. It's ASC 958 and ASU 2018. Now, ASU 2018 focuses specifically on distinguish between exchange transactions and contributions, just to make sure that we understand what that means. We're not going to cover that in this video. In this video, we're going to focus on only two of the five things that make up ASC 958, and that's conditional versus unconditional grants and revenue recognition for nonprofits in these situations. Now, researching grants as exchange versus non-exchange can be interesting. You can read the ASC 2018, and then reporting of grants and disclosures are a different subject, and they're much simpler and straightforward to understand. So let's look at ASC 968 and look at the differences. As we said earlier, if a grant is unconditional, revenue is recognized when the promise is made. That means that when you receive an award letter for an unconditional grant, even though you haven't received the money, that revenue is recognized immediately. In contrast, if it's conditional, even if you've received the money, no revenue is recognized until the conditions are met. Now, so what is a condition? Conditions have certain attributes, and these attributes include specific performance measures, quantitative measures. So a condition must be something specific like 300 people will be fed. But there must be some uncertainty. So if you say, for example, when you feed 300 people, you'll get this grant, there is uncertainty that you may not feed 300 people, in which case you will not get the grant. And conditional grants usually have a reimbursement or reclaim or a clause that says they will not pay you if conditions are not met. So let's look at two examples. Now, for example, one of the conditions might be complete a selected building project and provide evidence of occupancy. So here it's very specific in that you've got to complete the building and prove that it's got occupancy before you're entitled to those funds. So that makes it a condition because it's specific and measurable. For the next example, let's look at feed at least 500 people in a month to receive that month's award. So here we've got to feed 500 people in a month to receive the award for that month. Again, it's measurable. You'll either hit 500 or you won't. If you don't hit the 500, you won't get the award. If you do hit the 500, you get the award. So this is specific and there's uncertainty. And since it's refundable, you may not get the money. And that makes it qualify as condition. Next, look at restrictions. Restrictions are different. They seem similar in some ways, and yet there is a difference. It talks about a specific purpose, but it's not quantifiable and measurable. And there often isn't a refund language, but whether or not there is a refund language, if the restriction is general, then it's a restriction and not a condition. Let's look at some examples. For the first example, a grant letter might say, to be used only for a youth education program. There is no specificity beyond the fact that it needs to be used for a youth education program. It could be for salaries, for food, for supplies, for rentals, whatever you can think of related to that program. And so that's not specific and measurable, which automatically makes it not a condition, but it is a restriction. You can't take that money and use it for a, let's say, a senior support program. Um, so that's an example of a restriction. Let's look at the second example. To be used for salaries for mental health programs spread evenly through the fiscal year. So let's say you've got $12,000 and it says you've got to spread it evenly, so that's 1,000 a month. And it says it's to be used for salaries for mental health programs. So anyone who's working on that mental health program, this grant can cover up to $1,000 in this example a month of their salaries. Now, if you don't incur that expense, you can't use that money. Again, because it's not quantitatively measurable, this makes it a restriction. So let's look at that slide again, the big slide, and look at the whole landscape. We begin on the left with the grant, and then you have a decision tree, and there you make a decision on whether it's conditional or unconditional, and then restricted or unrestricted, and then you end up with the outcomes. Let's look at these in separate slices so it's easier to follow. So under this scenario, we're looking at a grant, and we ask the question, is it unconditional? And we say, yes, it is. It is unconditional because we could not find a condition or something that met the definitions of a condition. And by default, therefore, it is unconditional. So now that it's unconditional, we automatically have to recognize the entire revenue immediately. However, how you recognize that revenue can vary depending on whether it's restricted or unrestricted. If it's unrestricted, it'll be straight revenue. If it's restricted, it'll be classified as revenue restricted. But still, it's on that revenue line, and we'll come back to that later. Now, one thing to remember is your unconditional grant might be, let's say, a 3-year grant, and it might be, say, $36,000, $12,000 a year. And you receive an award letter saying that you can use $12,000 a year. Well, even though there is this restriction provision, the requirement is that we recognize the entire 36,000 as revenue immediately. Moving to the other arm of that decision tree, if the answer to the question whether it's unconditional is no, that means that it is conditional. So once it's conditional, we know that we do not recognize revenue until the conditions are met. So with that said, we then have this breakout into its conditional and restricted or conditional and unrestricted. So for conditional grants, record revenue only when the conditions are met. Now these approaches lead to some confusion sometimes. Some argue that it challenges the matching concept principle, because in the example of the 3-year grant that you received, you're compelled to recognize all of it as revenue in the current year and not in the future years. And so often people come up with ideas on how to manage that reporting while complying with GAAP. Now, consider that GAAP compliance is required if you are going to be audited or if some of your donors require it. But if there's no requirement for GAAP compliance, you can follow some simpler methodology to make it happen. So that's one of the challenges. The next four share different commonalities about issues with trying to capture these concepts and still follow accounting practices as we generally know it outside of the nonprofit sector. And that would include recognizing revenue when it's restricted. So once you recognize revenue and it's restricted, at the end of the year, it's going to flow into equity. So it is automatically in your equity line, but you really don't have access to that money. It's still restricted. So sometimes there are specific entries made to offset that in clear transactions, and it can get complicated. Then the next three are linked together. An award may be uncollected, which means that you know that there's an award out there that you should collect. An award may be unearned, meaning you haven't met the conditions to collect it, or it could be unearned and uncollected. All of these present a challenge. We're trying to manage GAAP accounting with business management needs. So let's look at this flow chart one more time, all the way from the left to the right. And we can see that we've got a good flow here. And what we've covered in this video here is how you take a particular grant and decide which of these four buckets on the right your grant falls into. So you're going to decide whether it's conditional or unconditional, and then you're going to decide whether it's restricted or unrestricted. And that'll put them in one of these four buckets. We haven't talked about accounting for it. In the examples we might address, you could receive the cash up front. You could receive no cash. You have an award letter, and you have to bill people to collect that money over time. And there are issues like, how do you make sure you don't forget that you've got an award letter and you haven't collected all of it? Say you're 18 months into a 3-year grant. Many companies and many businesses try to track this on spreadsheets and worksheets and separate tabs elsewhere and not in the accounting system. But a well-designed accounting system will allow you to track all these in one place and get reports that make sense. And then to the closing comments. So in this video, we broke down how to take a grant letter or an award, or even a donation that you receive, and categorize it into one of these four buckets. We've talked in theory about how you account for it, and we talked about revenue recognition. What we haven't covered is the specifics of how you handle this. Say, for example, you've got an unrestricted grant and you've got the cash, and it's over 3 years. Or say you've got an unrestricted grant, it's over 3 years, and you haven't got the cash. You've got a bill for it. Or it's a conditional grant and you've got the cash. Now, what do? You've got the cash, but you can't recognize it. You've debited cash and you can credit some kind of unearned revenue. There are a number of ways to handle this. Another alternative is it's conditional and it's restricted. So some condition has to be met, and then beyond that, it can only be used for a specific purpose. Once again, how do you track that grant which you either have received, you've got money in the bank, but you can't recognize it, or alternatively, you haven't received and you've got to keep track of it and remember to bill and follow up on it. These are topics I'll be covering in upcoming videos. And each of those videos are going to be longer, they're going to be more detailed and more tactical. So we'll break that out into two groups. One will be the unconditional group, and the other will be the conditional group. And then we'll break that down into restricted and unrestricted, with scenarios for cash is received up front and cash is not received up front. So you can see that this is going to bifurcate into a fair number of videos. And to keep each video a manageable size, we'll focus on one area at a time. If you think there are other areas in accounting for grants that would be helpful to you, please go ahead and add that in the comments below, and we'll consider that after we finish this series here. There is a book out there that provides some detailed breakdown on how you do these entries in different scenarios. We'll go much deeper than that, but it could be a great reference tool, and we'll provide a link in the video below. I hope you found this video helpful. We'd ask you to like and subscribe, and much appreciate your support. Thank you so much for watching.